This week at the zoo, the S&P 500 pulled back nearly 3%, while the Nasdaq continued to outperform with only about a 1.5% drop. Hello and welcome back to the Wall Street Petting Zoo. I'm Christopher Smith.
And I'm Robert Coburn. The S&P 500 moved about 0.5% higher to start at the week on Monday, recovering a small portion of its losses from the previous Friday's big sell-off. One piece of good news was that existing home sales slightly beat analyst expectations. In the bad news column, Carnival Cruise Lines extended its suspension of operations until September 30th. And JP Morgan warned that hedge funds were about to do $170 billion worth of end-of-month selling. And then there was the big one. The US and Europe are gearing for a trade war over who gets to tax giant multinational tech companies like Apple and Microsoft. Reports say that Trump may impose nearly $4 billion of tariffs on European goods. Obviously, this would be terrible news for an already fragile economy, and it weighed pretty heavily on shipping stocks this week.
Yeah, let me just amend that a little bit. The taxing of giant multinational tech companies is one issue. There's also some airline parts disputes. There's several issues involved in that trade war. But yeah, the big news is the US is considering about $3.7 billion worth of tariffs on European goods, and that could get pretty ugly pretty fast. On Tuesday, the S&P 500 moved another 0.5% higher on news of positive economic data from Europe. However, the news was pretty much all bad other than that. Data released on Tuesday showed a huge spike in the number of bankruptcies and also commercial mortgage defaults the previous week. So we have an insolvency problem, and that does not bode well for either the jobs market or for bank earnings coming up in mid-July. The US imposed a 10% tariff on aluminum from Canada, so you can add Canada to the trade war list. And of course, that's bad news for US manufacturers who import aluminum from Canada. And there was also more bad news for travel stocks, as Royal Caribbean Cruise Line joined Carnival in extending the suspension of its operations. The big story of the day was a huge spike in the spread of coronavirus in Texas, which had Houston hospitals just a few days away from capacity for ICU beds.
Yeah, Wednesday the S&P 500 pulled back 2.5% as the IMF reduced its global GDP forecast for 2020 by about 2%. And the EU threatened to ban all travel from the coronavirus-stricken US. The US threatened to slap new tariffs on China, and credit rating company Fitch downgraded Canada's credit rating due to the country's growing national debt. Disney took a 4% hit as employees petitioned the company to delay reopening the Disney theme park in Florida amidst the rising tide of coronavirus cases there. There was also a lot of bad news for Tesla, including a whistleblower report claiming that for years, Tesla knew of a flaw in the Model S's battery's cooling system that could set the car on fire, but the company decided to keep it quiet and sell the car anyways. Apple also pulled back on news that it planned to close stores in the Houston area.
Yeah, lots of bad news for both the global economy and for some major domestic US companies there on Wednesday. On Thursday, the jobless claims numbers came in worse than expected as the economic outlook continued to weaken. Last week, we mentioned that we seem to have hit an inflection point in jobless claims numbers where they might start worsening a little bit, and we saw that continue this week. One piece of data released on Thursday that kind of blew my mind was the share of personal income that people receive from the government jumped from about 16% to over 30% at the end of April. So those stimulus checks caused the amount of money that people get from the government to essentially double. Bank stocks moved higher as regulators eased restrictions on how they can invest their money. And that news also helped move the S&P 500 as a whole up about 1.5% for the day. However, the bank stocks dropped hard after hours as regulators also informed banks that they must suspend share buybacks and dividend increases through September. The Fed conducted a stress test on the banks to see if they had enough capital for sort of worst case economic scenarios. And they found that the banks don't have enough capital. Most of them have enough capital, but there are a number of banks that don't have enough capital. And there is risk of a financial crisis if the pandemic continues and we see some of those sort of worst case economic scenarios. Uh, we also saw the default rate on residential mortgages jump to 8.8% in data released on Thursday, which underscores even more the risk to banks as we move forward from here.
And Friday, the S&P 500 fell almost 2.5%, with banks leading the way down. The state of Texas announced that it's partially rolling back the state's reopening plan. Credit Suisse downgraded its rating on the entire global stock market, and Microsoft announced that it's permanently closing all of its brick and mortar retail stores, and Amazon announced that it's acquiring a self-driving vehicle company called Zoox.
Yeah, so to sum all of that stuff up, Robert, I think there were three big stories this week, and all three of them are pretty bad news for stocks. First, there's the risk of more tariffs and more trade wars, not only with China, but also with Canada and Europe. Uh, Secondly, there's a huge surge of coronavirus cases in Texas and Florida, and that is forcing those states' economies to start reclosing businesses. And third, there are a lot of companies declaring bankruptcies and defaulting on debt, and residential homeowners are starting to default more too. And all of this puts tremendous strain on the banks, which the Fed worries may not actually have enough capital on hand to handle all of the strain. So it's possible that, within a week, the trade war risk could just be resolved and go away. But unfortunately, I think both the surge in coronavirus cases and the insolvency problem are going to stay with us for a good chunk of the rest of the summer here, and we may see a significant weakening of the stock market. Let's talk stocks that we watched this week. Robert, what were you watching?
So last week I called out airline stocks, which got hit hard this week after COVID cases went up. And of course, the talks of the travel restrictions being made by international countries, specifically the ones in the EU, preventing travel from U.S. Delta announced that they will possibly be furloughing pilots, 2,500 of them, and also offering early retirement for qualifying pilots. Although I have heard that more people are traveling, but mostly for work related matters. And the TSA data we talked about a few weeks ago still shows that air travel is slowly increasing. Again, though, we are way far away from numbers that we had a year ago, but they are still going up slowly. My thoughts are that we will probably see more and more people risk exposure, and we will continue to see that upward trend. But we will probably have to wait until after July 4th weekend to see if this would be the case. We'll put that link to the TSA data below the video along with our Webull link. What stocks were you watching this week, Chris?
Yeah, so I was watching Invitation Homes Rent. Those are both home builders that sort of specialize in suburban homes. And so I thought that maybe people moving to the suburbs, moving out of the cities amidst sort of rioting and pandemic risk would cause suburban builders to kind of have a good week. And they outperformed the market. Invitation was down about 2.5% this week, but American about broke even for the week in a week of sort of red markets. As I mentioned last week, both of those stocks are still pretty pricey, and I also think that they could start to get in trouble later in the summer, especially with the rising default rate on residential mortgages and the sort of foreclosure ban expected to end on August 31st. So I didn't actually buy these, and I wouldn't actually buy these right now, but I do think they may outperform for the next month or so. I also watched dry bulk shipping and the energy sector. And unfortunately, both of those had a terrible week this week due to economies reclosing and fears of trade wars. It was just a bad time to own those sectors. Dry bulk stocks fell an amazing over 10%. Even though booking rates for the ships continued to soar this week, they're having a really good time for booking rates, but people are looking forward at the trade war risk and the reclosing risk, and they're selling off these stocks. And I think also, Robert, I would note with regard to the airline stocks, they obviously suffer from the same risks. And there was an announcement late in this week that New Jersey and a couple of other northern states are going to impose 14-day quarantines on domestic travelers from some of the hotspots, coronavirus hotspots. So I don't think that the impact of Europe travel restrictions and travel restrictions from northern states have shown up in the TSA data yet. So I would expect those things to show up in the data next week. So we'll have to continue watching those airlines pretty closely. What stocks are you watching this week?
So this week I'll be going back and watching video game stocks again, like Activision Blizzard, Zynga, and Tencent. Tencent has been in the news lately due to the quiet launch of their new streaming service Trovo Live, which sounds contradictory, a quiet launch that's in the news. But it's only been in the news due to rumors of big names possibly going to Tencent's streaming platform after the shutdown of Microsoft's Mixer being announced earlier in the week. With rising COVID cases, video game stocks are seen as quote unquote safe havens because when people are sheltering in place, video games are one of the few options left for entertainment. However, with the NBA and MLB season set to resume at the end of July and the NFL season right around the corner in August, this may have some negative impact as this will be the return of major sports to national television. What are you watching this week, Chris?
Yeah, so I like silver right now because I think that a lot of people are going to be looking for safe havens now that stocks are weakening. And we've also seen some pretty significant weakening of the dollar and bond yields. So I think that people are going to be rushing to metals as a way of sort of escaping the dollar. I've also got some Kroger, which is, of course, a grocery stock, because if economies reclose, then I think that grocery store stocks will be hot again. And we saw a little bit of that late this week. Kroger crushed analyst estimates on its earnings report last week. And part of the reason that it did so well was because its e commerce sales were much higher than expected. And so I think that Kroger could continue to outperform, especially if we continue to see reclosures of the economy. But even if like everything were to return to normal, I think probably some of the e-commerce demand that Kroger has seen will continue because people have realized, oh, this is a convenient way to get groceries is to sort of order it online. Options traders remain extremely bullish on the stock, and I think that it could get kind of an upward breakout in the next week or two. All right, folks, if you heard anything on the podcast today that was helpful to you, please give us a like, share, or follow on YouTube. You can also like us on Facebook or follow us on Twitter. We're at WSPZoo on Twitter, and I post news updates throughout the week. That can help you be a little bit more agile and get the news sort of as it happens rather than at the end of the week. And of course, we also post our weekly videos on both Twitter and Facebook. So that's kind of a convenient way to get those videos as they come out. We don't do any advertising for the show, so your word of mouth is one of the only ways that we can get the word out. And so it's really helps us if you can tweet the podcast out to your friends or share it on Facebook. That goes a long way toward helping us get the word out. And we also have a referral link to Webull underneath the YouTube link. If you go and use that link to open a new Webull account, deposit $100, you can get a couple free stocks, and we'll also get a couple free stocks, and that helps support the podcast. We put in a lot of hard work, so we really appreciate any support that you can offer us. And we will see you back at the zoo next week.
See ya.